Now let's run through a day of day trading and how you should be taking trades here. Right, so we're going to use Thursday 30th of June as an example of running through my thought process. So before you start any trades, you must have market context entering into Thursday. So Thursday's market context, we have to take a look at the current chart on Thursday like this. So this was trading action until Wednesday, and we understood the price action right here. We saw that there was a really hard resistance level here at this yellow 381 level. We see that throughout the entire day, the chart had a lot of difficulty to try to breach this level. And on a macro chart and a 30-minute trend line, we see that there is some form of selling channel. And we see this flagging here because it broke the channel, but we were still being restricted by this resistance level here. We started flagging and forming an ascending wedge in this flag here. Now, ascending wedges are great for price action, especially when we have horizontal price levels. I'll explain that in another video. But this means that the sellers are holding to sell at this price, but the buyers have to buy at a higher price at each time. Now, when you're a buyer, you're incentivized to buy at a lower price. No one wants to buy at a higher price. So if this behavior carries on, and this is why we see an upward trend line here, if you are forced to buy at a higher price at every time, we can safely assume, especially when the volume is kept consistent, that there will be less buyers over time. And with this selling channel that's holding, the sellers get to sell at the same price all the time, while the buyers are buying at a higher price. So we can assume, with consistent volume and without manipulation, of course, that there will be equal level of sellers but less and less buyers. So this creates an imbalance, especially when we reach to this apex right here. This is why we expect some form of selling, which happened in the pre-market. Now, this also means that this has created some form of a selling zone here, which we call the supply zone, and we determine this as a hard resistance level. So that being said, we are clear that there will be some form of range protection right here at this level. Now, the market context also tells us that we see some form of rejection here, and if the sellers want to continue, they will have to start flagging and building up the selling strength and selling pressure in order to break through to this level here where we see a flag. And this is where you form a head and shoulders pattern. So this head and shoulders pattern is basically sellers breaking through to this range, building up strength by draining out buyers to retest into another strong level of support to break through to a new range. So I covered this in a video analysis, and I will put the links below so that you can also refer to that. And with this market context, we are able to identify the puts and the calls range, especially with such a clear defined range of trading. So with market context in mind, it really is much easier to trade, especially when we open. Now we are trying to discover structure, and what you see earlier in 30-minute trendline chart, as I explained, is a form of structure between buyers and sellers. And the chart moves because of the imbalance between buying and selling. And what I explained earlier is a structure we call bear flag with an ascending wedge. And these are the structures that you want to identify. Because if you can identify a structure like that, you can set clear stop losses and you know where to take your profits. So there is very clear trade structure here for you to take your trades. So when we open on the first candle, for example, let's start this opening with this first candle here. Now there is absolutely no structure, right? There is no structure at all. So how do you trade early candles? And this is the 5-minute chart. Now, if you have to trade early candles, you have to depend on levels or the price action on the candle itself, especially when you see a change in momentum in the selling and buying. Now, I would normally discourage beginners from trading the early candles because it takes practice, but you can practice this. I will cover it in another video in future. Today's video is about trading with clear structure. Now, if you have to trade early candles like this, and you have to depend on levels Now this is what you do. If say I trust that this yellow 377 is going to be a strong resistance, because this is a major level and I believe that the day will be bearish. That's what the market context is telling me. So I'll put my stop loss here, and when the chart reaches as close as possible, I would take puts right here. So I can calculate my stop loss here and I can take my profits early. So early candles, you're very much dependent on levels like this and just setting your stops. So it's more risk management than structural play. Now, is there a risk involved? Absolutely, right? You're just basically trying to time your risk. Now, if it goes against you, just get it stopped. That's fine. So it's as good as a gamble, especially for early candles. So I try to discourage beginners from doing that. But let's see how it turned out. Now you see the chart starts to sell off. Now, normally you start chasing after this red candle, is it? Or especially when you see a major level here, or you start to take calls thinking it's going to start a reversal. Now, this is where you will start making losses because there is still no clear structure. You see large action, you think you're missing out. No, you're never missing out in a large action. There's always a trade to take from here. So when this happens and we see some form of rejection of this yellow level, now don't always be thinking that this is going to be a V-shaped reversal. Sometimes it's wishful thinking and we have to be careful about that. Now we take a look at the 1 minute chart. We are able to identify very quickly a selling channel, a rough selling channel, right? Especially when we started trending below the bottom trend line here, but we met with some rejection of this major level here because there are some buyers off that level. And it's at this point that you see that there is a resistance here. Now we want to see when it breaks the channel, is it forming a bullish structure or a bearish structure? Now bullish structure, especially in early candles, will be where you see a very strong volume spike, especially in the buying, but you don't see that here. But instead you see that there is a very strong resistance level here, and we see a ascending wedge that is forming, right? Buyers have to buy at a higher price each time, but the resistance is holding. Now this is a good bet then that you can take puts with this structure here. You see the structure, you see a clear resistance level here. You set your stop loss right above this level. You time yourself, especially in this green candle, and I took puts on this green candle. When this green candle comes up, you trust these 2 long wicks here to protect this level, and you take puts at this green candle. Why do you want to take puts at this green candle? Because you will counter slippage and you will get a very good fill on your puts. And once this red candle comes in, you are immediately green in your puts, especially when you open the trade. It's a great feeling, right? So sometimes when you identify structure, you can see a clear stop loss. You're able to pull off trades like this, where you can take puts in a green candle with a clear stop loss without worry. And this is great if you have a clear stop loss, because if you're stopped early from your trade, you make minimal losses because the structure just does not hold. So in this case, we saw a bear flag. We had a clear stop loss. I took the puts on the green candle, and once the buyers were drained out, we started a selling channel again. So this is great. So this is just pure price action play right here. So I missed the early selling. So what? These are early candles. There's so much risks here. So don't be fearing of missing out. There will always be another play, especially when we see the selling channel being broken. We want to see whether there is a continuation of the sellers. Now, why do flags happen? Because at major channels, there will always be buyers here. The sellers want to continue the bombardment of selling. They have to drain out the buyers, and this is why we see some form of flagging. So in flagging like this, you want to see whether this flagging is a bearish flag or a bullish flag. And this is just a very clear example of a bearish flag. Now, next we enter into this zone here, and we had market context here to tell us that this is a supply zone. So I also mentioned this in the Discord server, right? We had market context, and this is why morning daily briefs are so important. You need to watch the daily briefs. You need to know where are the important zones so that we can plan our trades ahead. And so this would be an excellent place to be taking your calls. Now, if you're taking calls here, obviously you want to close partial profits as soon as possible to protect the trade at a major level. So if you took calls here and close your partial profits here to protect your runner, you're good to go. Right now, it's impossible to see that the chart will have run up like this. It's almost impossible to see it, only on hindsight. So if you took your calls here, because this is a really strong demand zone, take your partial profits here. You can adjust your stops later, right, and keep a runner all the way through. But if you held a runner along the way, you need confirmation that this rally will continue, isn't it? So this is where also price action comes in again. If you're holding a trade, you still need to pay attention to price action. Now we take a look at the 1 minute chart. Now we see that another selling channel has been formed. We broke the selling channel in the demand zone here. We started flagging. Now this flagging is very much less bearish, if you noticed, right? This is a very consistent flag here. So this means that buyers could be building up the strength here. And we see that there is a buying spike thereafter that formed because there is reduced volume. Now when you're reducing volume in a supposed bear flag, it means that sellers are being drained out. Sellers are supposed to be dominant in a bear flag. But if you see volume reducing, it means sellers are not breaching this level here. So that's one way to take a look at it. You take your calls here, especially when supported by another indicator that this is the demand zone. So we have several indicators. First one is the breaking of the selling channel. Secondly, we know this is a strong demand zone. Thirdly, from some price action, we see indecision dojis. This is a neutral flag. And we see that there is a very strong support level, demand zone, neutral flag, reduced volume in a supposed selling action. So this may be a good place for us to take calls. And we see the breakthrough when the buyers manage to break through here after the reduction and diminishing of the sellers, right? There will be some rejection of the major levels again. And we see some form of rejection here again. But this rejection did not breach through the previous low. So we could have been forming here, right here, as we drew this, a possible buying channel. And we see that this buying channel right here got wider and wider. So in the Discord server, I brought this up, especially if we clear yellow. Yellow is a major level. We see that it's being tested multiple times with some sellers, and the buyers are trying to drain the sellers. And they are managing to do that. And we have a consistently higher low, but yet we have higher highs. And this is forming a widening wedge. And this means that buyers, even though they are buying consistently on the same gradient, they are managing to break through to a higher high than a supposed parallel channel. Now, this is extremely bullish. And we recognize that, and we told the members that this is an extremely bullish structure. And if we do clear the next major level here, which is giving us problems earlier, if we do clear this, then we are certainly going to be very bullish for the day. And that's exactly what happened, because we got really bullish all the way out. We knew that this was extremely bullish. So this was a confirmation that we received. We cleared the yellow, we had higher lows and even higher highs, creating a widening wedge. Now this is an interesting trend, right? It means that buyers are taking control from a demand zone. So we knew that the calls would have been good here. And if you have reliable levels like this, right, you know when you want to take partial profits, you don't want to be hanging out too much, right? You see a yellow level, we see some form of pullback. We see some flagging at this yellow level here. So if you have reliable levels, it helps you to decide when you want to take profits. Now we went up quite high up. This was a monster rally right here from the demand zone all the way back up to the supply zone. So at this point, we see some supply zone, right? We also identify the supply zone here right from the start of the day because of market context. So once we had market context, it was easy to make preparations. SPY has not consolidated yet. It was extremely high volume throughout the entire day. So once we hit this strong resistance level here, now a usual trading day does not have consistent volume throughout the day. There will always be a period of time where traders have to take a break, go for lunch, and there will be less trading, normally in the PM session, because this is where the European market closes. So we expected some form of consolidation here. We knew there was a very hard resistance here and a supply zone here. So I mentioned that in that day's video, if we did come to this level, it will be a great place to sell your calls here. That's what I did. Why sell calls instead of taking puts? If you can afford it, of course, because there will be consolidation. You will be taking the profit of this time decay here. You will be taking their profit while also enjoying extrinsic and intrinsic value in your options. And that's what happened here. We saw that this high was never challenged again twice. So we have some form of a double top, protected hard resistance, and this was also from market context. So we sold calls here, and this would have been really beautiful. Take your profits along the major levels here, and we see that it's still a continued selling channel. So all in all, it's a very straightforward trading day, and that's what we do. In the Discord server, I will provide analysis like this, and if you were to log in every single day, join me trading every single day, it's a good place for you to learn on how to read price action, on how to identify structure. Now, I trade based on structure. That's the most basic principles of economics. I will create a video to talk a little bit more about structure in future, but the best way to learn is to live trade it, is to see it for yourself, is to be part of the action. That will help you with understanding structure better. So this is just a very quick video. So if you'd like to see more of this, please like, comment, subscribe. So thank you very much for watching, and I will see you in the next video.